Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
You're watching Stockwatch this week. I'm Simon Brown, and joining me to unpack your stock-related questions today via Zoom, Alex Duys, Umthombo Wealth, Cobus Potgieter from Southern Cross Capital. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gents, appreciate the time today. I want to start with some themes that we've had come out. Cobus, we've had the healthcare results. We've had life healthcare, Netcare a little bit a while ago. Of course, Mediclinic sits in Remgro. We don't directly see those numbers. But are you looking at the healthcare and looking at the numbers? Are you seeing anything there? Are you seeing opportunity for investors, or a sector you're staying away from?
It's an interesting situation. Look, I mean, like so many South African businesses, they are subject to GDP growth more than anything else. And if we look at the number of insured lives or members of medical aid members, we all know the middle class has been squeezed, and that number has remained static for more than 10 years now.
Yeah.
So from that perspective, well, they obviously had the setbacks around COVID, and then all of them, bar none, had some offshore adventures that were somewhat costly. But I suppose reflecting on the latest set of results, we saw robust numbers from both Mediclinic inside of Remgro and Netcare, poorer numbers from Life. And a lot of that comes down to strategy. Netcare has been optimizing the portfolio, shedding network business, looking for higher margin business, running the existing business as well as it possibly can, whereas Life has been a little bit more aggressive and expansive, and that Netcare almost running it like AVI, running it as if it is ex-growth, optimizing, rolling out optimization, better IT systems, which would lead to further cost savings. That seems to have been a better strategy, and it remains my preferred pick in the space.
Alex, for you, some healthcare. Mediclinic, of course, as you say, is part of Remgro now. Skulk Low will always remind us we can get Remgro at a nice discount. But are any of the healthcare local stocks of interest to you?
I think Cobus summed it up perfectly there in my view. My preference also for Netcare. If I have to buy one, I think one thing I want to highlight is they do have some leadership issues. I mean, the CEO was supposed to have stepped down a few times before.
Yeah.
Still hasn't been ironed out. But there's no doubt that they are much more efficient. Their guidance also that margins are probably going to pick up. I guess for those a bit more negative, you can argue that capex is going to be quite high for coming year, 1.9 billion. That's a high number relative to market cap. Balance sheet is already starting to sweat a little bit because of all the share buybacks and dividends they've done. But if they can pull it off and they can get the growth and we start seeing top line picking up, I think they are the best positioned to grow earnings. Live healthcare, not really our preferred effort. And then, in Remgro, obviously Mediclinic is a big component of that. They've been struggling in Switzerland, been doing reasonably well in South Africa as well as in the Middle East.
The other theme we've had is leisure. We had Soho Sun yesterday. We've had Southern Sun. We've seen some other numbers from the other leisures. Alex, I mean, one of the G20 must have helped a bit. Joburg, Sandton hotels were all full. Cape Town remains a world-class destination for foreign tourists. Is leisure a space you're looking at? Is there a preferred pick in the sector?
Yes, we do like leisure. Our preferred pick is in Southern Sun. Even though it's done well, we still think the business is very well positioned going forward. We saw the CEO coming out saying that the October occupancies was the best been since 2010 World Cup. Now, some of that can be attributed to the G20, but I think in general, it seems like there's a much higher demand, and not only from tourists, but also from business. And these businesses are incredibly fixed costs intensive. So we do see top line going up. It obviously leads to the bottom line, but they also get pricing power. For example, in Cape Town in February, when it's peak season for foreigners, you can pretty much increase your price at 20, 30, 40%, while your cost base is still obviously in rand terms. So we like that business. Obviously, when you look to Soho and the business like Santa National, then you combine other type of assets like gambling. So different dynamics involved there, but certainly just on the leisure side, our preference for Southern Sun, and obviously City Lodge will also be a beneficiary of that theme.
Yeah. Cobus, for you, some leisure?
Yes, my preferred pick in the space is my pick from the previous show, City Lodge, and I also like I like how having Soho Sun, similar to the Remgro argument via HCI, getting that cheap entry point.
Yeah, we've actually got a question coming, HCI, and if I remember, that was your stock pick from a month or so ago. But let's go to the last theme. You've had two listings coming through during November, Optasia and Cell C. Cell C yesterday was up a rand yesterday. It's trading another rand 50 higher today. Of course, the book build price was way below the initial hoped for price. Cobus, do either the Optasia or the Cell C attract you as an investor?
I want to be critical of the investment bankers for a second, that really are being greedy and leaving nothing on the table for the investors to support these IPOs. And that certainly was the case with the Cell C listing coming in way too optimistically on valuation, and Optasia coming in, well, similarly, I suppose, given that there was almost no pop from that very high listing price. I suppose both quite speculative. Cell C somewhat more predictable, but you are betting on the turnaround and the further growth in the low touch business. I prefer entry point into that again now, given that they've been forced to retain some as blue. You can hold the Cell C at a significant discount via the blue listing, and part of the reason it's popped still further. So despite the somewhat disappointing listing results, is Ellen Gray coming out today with the announcement that they have been a massive supporter of the Cell C listing. They're in 15% of the business now, and it looks like the market is receiving that quite positively.
Alex, for you and Optasia, to your point, Cobus trading at 1923, IPO was 19. The bankers are not leaving anything for the private clients out there. Alex, do you have a preference, either or neither?
Yeah, neither. We didn't participate in either of them, so we had a very close look at Cell C, but decided against it. So we obviously can see why some investors are bullish on it, but at the same time, there are also some risks that for us at the moment it's difficult to quantify and to really get a balance of probability. So we're comfortable being on sunlight of both of these, and as I build a track record a bit more, and some of our questions we have in a moment gets answered, I think we'll have more confidence to have a look at it and get a sense of where the valuation should be. We did also think that the range for Cell C was a bit high, and however, despite that, before there might be enough interest to price higher than the price came in. So we were a bit surprised to see the lack of interest, but but for us, none moment, it's not really of interest.
Yeah, and to Cobus's point, I mean, Ellen Gray did come and say, hey, we'll take a 15%. And I wonder how much arm twisting there was on the price around that. Cobus, let's come back to you a moment. You mentioned HCI. It's been one of your picks a month or so back. Just had results. Thoughts on the numbers?
When these holding companies report, it always tends to be boring.
Yeah.
And I think at this stage, the headline number coming down so significantly is once again related to the prospecting assets, oil and gas. And the market is essentially attributing no value there. Essentially, all of the discount is in the leisure assets, and it still sits at all of the value sits in the leisure assets, and it still sits at a significant discount to that. And I'm hopeful that this transaction they did with the institutional shareholder will start to remove that overhang, that requirement for liquidity, and perhaps lead to a narrowing of that discount. And even if it doesn't directly, I'm hoping the management takes further action to unlock discount to shareholders, perhaps restructuring and simplifying the structure, as they have frankly a track record of doing. So it remains an attractive entry point into the leisure assets that we discussed before.
Alex, for you, HCI?
Me, it's a frustrating one because you can see the massive value in the business. If you value the underlying assets like Soho, what we think of the true value, and ascribe a value to the oil business, which we think, call it ballpark you can easily see the business going up 50, 100%. But you need to start seeing some corporate action. We think, perhaps selling or bundling business like Southern Sun and Frontier will probably make sense. We need to get better understanding on actual debt at the center. I think the disclosure there leaves a lot to be desired. And also, even in a set of results that came out this morning, there's very little disclosure there. You would like him to be a bit more forthcoming. Certain businesses can have a better sense of what the true value is and so forth about strategy. We have seen some activist shareholders, specifically from offshore, being quite critical of Johnny over recent years as the CEO. But yeah, so I think because we see everyone sees the value there. But I think if those that are patient, you're buying at a big, deep discount at the moment, and most likely, as Cobus says, you will be rewarded concerning your track record.
Question coming through around gold and PGM miners. Obviously, you had a spectacular 2025, gold more than PGM. The question is, do we carry on holding? I've taken some profits already. Do I keep some just because we don't know where gold is going? Alex, would you, assuming you're taking some profits on the precious metal miners, would you continue to hold? Because targets for gold could be anything next year.
And that's the problem, Simon. It's very difficult to say where gold is going to go. I think if gold prices continue to hold at these levels, call it above 4,000, and gold shares are still cheap. So I think that's something to be cognizant of. I think the PGM share prices perhaps run a little bit ahead of the PGM basket. So that's probably telling you that the basket needs to catch up. PGMs, of course, also trading at quite a big discount still relative to gold. So I think that's probably what the market's looking at. But it's all about the forward expectations on these commodities. And if you are bullish on them, then certainly holding the equities, I think, will be good. One thing I want to highlight is that the gold companies have all come out with very aggressive acquisitions or greenfields developments. So that means that those cash flows aren't coming back to shareholders. Where historically in the PGM space, if you do call the cycle right, you tend to receive it back in dividends. So that's why, in general, I prefer PGMs over gold. But the gold market we have at the moment is not what we're used to, so it's not normalized. So let's see how it pans out, but be cautious to be too aggressive or too negative on it.
Cobus, for you on gold miners, I mean, I remember looking earlier in the year, they kind of got an average price of about, call it, let's say, 2,200 an ounce last year. If gold stays at 4,000, they got a ton more profit to make, but the if there is the big statement. Your thoughts on gold and PGM miners after what's been a spectacular year?
Yes. And I mean, to your point, exclude them from your portfolio at your peril.
Yeah.
Even though I'm not particularly a fan of these things, the operational leverage that they are achieving at gold at 4,000 and some of the bugs calling for 5,000, that is absolutely enormous. Something like the likes of Anglo Gold, just looking at the recent results, despite aggressive capex, it's actually starting to look like a bit of a yielder. But to Alex's point, platinum PGMs are more in that sweet spot where we are not seeing the capex, we're not seeing that further investment, and we see a higher probability of return, of just sort of continuous excellent profits without stimulating additional supply coming to the market, unlike in the gold space. So similar story. I think hold those for now, but I wouldn't, I dislike the thesis for $5,000 or $6,000 US gold. We are trimming at this stage, but we remain invested in those names.
Yeah, and I take your point. I mean, 6,000 gold, there is something going very wrong somewhere else, I suspect. Panel, a question coming through. Please ask your panel on their thoughts on Rabex. Cobus, for you, Rabex, we don't have much of a construction sector left. They, of course, have got some Australian operations. Thoughts on Rabex?
Their Australian operation has been a bit disappointing, and so is the materials, the chrome specifically, of course. The outlook for China being a little bit more bearish than expected, but their core business has been performing remarkably well, and that is in infrastructure. Of course, they're known for building roads, but other types of infrastructure construction as well. And the order book continues to swell. So given the current valuation, we still like it. It's a pity that these guys have ambitions and end up sort of muddying it a little bit through diversification. But if you like the SA Inc. story, and it looks like the government seeing a little bit of fiscal relief, a little bit of headroom for further infrastructure spend, that's probably a decent outlook for Robex overall.
Alex, for you, some Robex?
Yes, agreed. I think if you look at order book specifically in South Africa, they're well positioned. The last set of results were poor, but we expect a much better set of results going forward. So yeah, I would say certainly very, very bullish. I mean, obviously tied to lots of SANRAL or road investments in the country, general building and infrastructure, as well as renewables. So we think they're very well positioned. And at the same time, we do expect a recovery in Baobab going forward. That's the chrome business that Cobus referred to. So that means at least the cash drag that will come to an end, and that will, I think, further accelerate the re-rating in stock.
Question coming through around banks and the JSE. They've had a moderate year. The question is, are they still cheap? Which would be a preferred entry into our banking sector? Alex, for you, our banks, I mean, some of them have run, and some of them, and you know, their price to books are maybe sort of approaching too, Capitec aside. I'm not sure any are massively expensive. Your thoughts on banks and a preferred bank?
We certainly think the banks as a whole is quite attractive at the moment. If you look at the SA 10-year bond, it's obviously strengthened a lot this year, and something like the property sector has followed suit, but the banks haven't. So the banks are actually looking very attractive relative to the Cobus in our view. And also, if you do see uplift in South African GDP prospects next year, the year thereafter, then earnings growth will probably be in the region of high single digits, perhaps even low double digits. And that is the case, then the banks, in our view, is very attractive. We think Nedbank is the highest geared relative to the recovery in SA. Consensus are the lowest. It's very attractive relative valuation. And then obviously the quality players like Standard Bank, we still think is very well positioned up some. Pretty much at the top four at the moment. We own all of them. So we're quite bullish with the banks.
Cobus, for you, some banks. I think you've picked a bank once or twice, I think, in the last while.
Month after month. I'm bullish these things. Similar argument, you know, Gavi's relative to banks. Just outlook. We like SA Inc. These things have re-rated or derated relative to where we saw them a year ago in the wake of the GNU forming. Our core pick remains ABSA, which also does well in a cutting cycle, and we do expect further cuts from the Reserve Bank. And then our tactical pick, just given current valuations, is Nedbank. Again, that specific corporate activity exposure, which we expect to pick up, in addition to just being cheap as chips.
Question through around diversified miners. They've all got a bit of copper to varying degrees. Does the panel have a preference between Anglo Billiton and Glencore? Cobus, a preference between the three big diversifieds?
Glencore, which goes both ways, right? Both old school with coal and copper. And it's been an underperformer of late. I guess less subject to corporate activity than the others. But yes, that remains a hold for us.
Yeah, I know BHP walked away from Anglo again, and they've got the Trek deal with the Canadian Trek coming up. Alex, for you, a diversified miner?
Also, for the years, the same as Cobus. Also very bullish on copper. I think also steelmaking coal looks quite interesting. Tight the fundamentals in India, and I think at some stage thermal coal will also pick up. So I think the combination Glencore looks better. Anglo is probably already in the price, and Billiton was a great business, but we are concerned about iron ore medium to longer term. And we do think it's going to be difficult to shift that portfolio meaningfully to change the business.
Yeah, hence they wanted Anglo because they wanted copper, and that was an easy way to do it. Question come through. I hold Kira, but of course it's being delisted, which disappoints me. I want to take that money and put it into another education stock. Is it Advotech, is it Stadio, or perhaps it is both? Alex, would you look at Advotech, Stadio? Do you have a preference, or perhaps both?
I'd say both. We own both. I think Advotech at the moment's valuation was a bit more compelling, but we do really like Stadio. We've been supportive of that business for a number of years. They're starting to see more institutional interest in it. Obviously, if we do get university status in South Africa for private universities, that will be another growth. So I think either of the two or both are looking for us very compelling.
Cobus, for you, either or both, neither? Can't
I
be
just
neither.
hold my Kiro and end up with Capicheck and consult. What's not to love about those businesses? But yes, I'll just reiterate what Alex says. It's the low quality player is being delisted, and uh, uh, you know, take some Stadio, take some Advotech, great businesses, both of them.
Yeah, and neither particularly stretched in terms of valuations. A question on Master Drilling. In fact, Cobus, I think we're going through most of your picks today. Master Drilling, if I recall, is another one of yours. Should be doing better with commodity prices currently. Yes or no? I mean, the big ones are obviously gold and copper. They're all over the world. Master Drilling, I mean, it's a nice little business.
Sometimes I wonder if the CEOs of these businesses anonymously send you these questions just to cast the light on their little small caps that perhaps shouldn't be listed.
It was SMS, so
Oh,
it might have been. It might have been. There's no
Might
name
be
attached.
a burner phone. Yes, look, the valuation is very compelling. It is a small cap. It is highly liquid. But as you mentioned, given the geographical diversification, I don't know if the pickup in activity argument holds that well. But it's one of those uncovered, unloved, very, very cheap stocks that might be subject to corporate action at some stage down the line. So I guess it's not the worst call in the world.
Alex, Master Drilling is one you do follow?
Yeah, not really our preferred play. I do think Cobus is right. The corporate action is an option for them. But the big issue of them is, I mean, they're so well diversified in so different regions, currencies, commodities. It's difficult for me to really get a gauge of where sustainable growth is going to be if you take a 3-5 year view. And as a result, I prefer other businesses where I can better understand opportunities as well as risks.
Question coming through around Discovery, and then we'll go to some stock picks. Discovery, I hold, I'm happy. Is there anything I should be worried about? For you, Alex, anything to I mean, there's NHI, but I mean, NHI, I'm not sure if that happens. Discovery, any red flags, anything that worries you around Discovery?
Yeah, I haven't owned Discovery for about a decade now. Now we do have concerns about the earnings quality in the business, the level of debt. We think they're using quite aggressive actuarial assumptions combined with accounting. So for us, if we compare that to a Sanlam, we think that's much more conservative valued, actually undervalued. And as a result, on a relative basis, we've got a much higher preference for something like Sanlam or even Momentum. So we're not big fans of Discovery, unfortunately.
Let's go to stock picks. Cobus, forget your Discovery take next time. You're going with Universal Music Group. This is a great business, and your pick today.
Yes, the largest music company in the world. And these things have really transformed because of the streaming services. They own the IP. Every time you listen to a song, that'll generate a bit of revenue for Universal Music. They own the Taylor Swift catalog, including all of her upcoming albums. You wouldn't believe what a significant portion of earnings growth that is, or perhaps you would. And then, just from a technical perspective, the second largest shareholder in this business is Vivendi. And Vivendi is subject to a legal case at this stage, where essentially the owner, Vincent Bolloré, is accused of having effective control through a restructure. And the highest court in France is to rule on this today. And that is why, or I mean, speculatively, I suppose, why the Universal Music Group share price is so suppressed. Because if he loses this case, he's expected to settle that situation. We're using UMG shares, which would create a significant liquidity overhang. Regardless of that outcome, this is a high quality business. So either the overhang occurs or it doesn't, based on what the court says today. And you can get into this very high quality, very defensive business at a suppressed valuation.
Yeah, I'd actually forgotten about that Vivendi court case that was happening. Alex, going with Clicks.
Yes, so we are quite constructive on SA Inc. at the moment, and we think that we can pick up some quality at a reasonable valuation. That's pretty much what Clicks at the moment. So we expect about a forward P of about 22. If you look over the last 8 or so years, that's a very good entry point into Clicks. And also remember, foreigners haven't been buying our market for a number of years, but they've been buying our bond market for the last few months. So if foreigners do come back, I can bet you bottom dollar they're going to start looking at businesses like Clicks, Capitec, and so forth. So if you can buy Clicks at a relative attractive valuation with decent growth, we think it's a good entry point.
Yeah, and foreigners were huge into clicks back in the day when they were net buyers of our equities. Thanks to our guests. We'll leave it there. Alex Duys, Umthombo Wealth, Cobus, Potgieter from Southern Cross Capital. Just a reminder, tune in this Tuesday at 10 a.m. as Gauteng MEC for Finance and Economic Development delivers the province's 2025 medium-term budget policy statement. Join us live for the numbers, politics and spending shifts that will shape Gauteng's year ahead. That's all for now. Stay tuned. Lots more coming up right here on Business Day TV.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.